Picture this. You're sitting across from an IRS agent, sweating bullets, when suddenly they lean forward and ask if you've ever tried to claim your pet hamster as a business expense. Welcome to the wild world of tax negotiations, where truth is stranger than fiction, and the most ridiculous stories often teach us the most valuable lessons. I'm about to share 10 incredible tales from the front lines of tax negotiations that will make you laugh, cringe, and maybe even pick up some serious strategies for your own financial battles. These aren't just entertaining stories. They're masterclasses in human psychology, negotiation tactics, and the art of finding common ground with people who literally have the power to empty your bank account. Before we dive into these jaw-dropping encounters, let me set the stage. Tax negotiations aren't just about numbers on spreadsheets. They're about people dealing with people. And when emotions run high and money's on the line, things can get absolutely fascinating. Every tax professional has a collection of stories that sound too bizarre to be true. But trust me, reality has a way of outdoing even the wildest imagination. Our first tale comes from a seasoned tax attorney who once represented a street performer in San Francisco. This juggler had been claiming his colorful wigs as business expenses for years, which seemed reasonable enough. But here's where it gets interesting. During the audit, the IRS agent discovered that our performer had been wearing these same wigs to family gatherings, grocery shopping, and even romantic dates. The negotiation turned into a philosophical debate about where business ends and personal life begins. The breakthrough came when the performer offered to demonstrate his act right there in the IRS office. 20 minutes later, after watching this man juggle flaming torches while wearing a rainbow wig, the agent agreed to allow 70% of the wig expenses. Sometimes showing, rather than telling, is the most powerful negotiation tool you have. The second story involves a small business owner who ran a dog grooming service from her home. During her audit, she claimed her entire house as a business expense because, and I quote, "Dogs are everywhere, so technically my whole house is my office." The IRS agent wasn't buying it until they visited her property for an inspection. What they found was a woman who had genuinely converted every room into some aspect of her business. The kitchen stored dog food and supplies. The living room was a waiting area with special furniture. Even the bedrooms had been transformed into grooming stations. The negotiation became less about disallowing expenses and more about helping her properly categorize them. The lesson here? Documentation and genuine business use can turn even the most suspicious-looking claims into legitimate deductions. Story number 3 takes us into the realm of creative accounting. A freelance writer claimed his extensive comic book collection as research materials for his work. Initially, this sounds absurd, right? But during the negotiation, he produced contracts showing he had written articles about comic book investing, superhero psychology, and pop culture trends. He even had published pieces referencing specific issues from his collection. The IRS agent, who happened to be a Marvel fan herself, found herself in an hour-long discussion about the investment potential of vintage X-Men comics. The resolution? 50% of the collection qualified as legitimate business research, but only for comics purchased after he could prove he was writing in that field. Our fourth tale centers on a massage therapist who tried to deduct his gym membership, protein supplements, and even his dating expenses as business costs. His argument was that maintaining his physique and social skills was essential for client retention. The negotiation got heated until the therapist made a brilliant tactical shift. Instead of defending his questionable expenses, he focused on the legitimate ones the IRS agent was trying to disallow: his professional massage oils, table maintenance, and continuing education courses. By giving up the ridiculous claims voluntarily, he gained credibility for the valid ones. This strategic retreat saved him thousands in penalties and actually resulted in additional deductions being approved. Story 5 introduces us to a farmer who claimed his entire vacation to Hawaii as a business expense because he attended one agriculture seminar while there. The 7-day trip included surfing lessons, luau's, and luxury resort stays. During the negotiation, instead of trying to justify the unjustifiable, his representative took a different approach. They itemized every single expense and clearly separated business from personal costs. The seminar registration, 2 nights of lodging, and meals during business activities were legitimate. Everything else was personal. This transparency and honesty impressed the agent so much that they didn't pursue penalties, even though the initial claim was clearly inappropriate. The 6th story involves a consultant who had been working from coffee shops and claimed every coffee purchase as an office expense. We're talking about $12 a day in coffee expenses, which added up to over $4,000 annually. The IRS agent was skeptical until the consultant produced detailed logs showing exactly which clients he met, at which locations, what work was accomplished, and how these meetings generated income. He even had testimonials from clients about their productive coffee shop meetings. The negotiation resulted in a compromise where coffee expenses were allowed only for days, with documented client meetings or specific work output. Our 7th tale features a music teacher who claimed her concert tickets as continuing education expenses. At first glance, this seems like someone trying to get free entertainment, but her preparation for the negotiation was masterful. She brought detailed notes from each concert, showing how different performances influenced her teaching methods. She had lesson plans that incorporated techniques she learned from live performances and student feedback, showing improved engagement when she applied these concepts. The IRS agent, initially skeptical, became genuinely interested in her teaching philosophy. The result was approval for classical and educational performances, though pop concerts didn't make the cut. Story 8 takes us into the digital age, with a social media influencer who claimed her entire wardrobe as a business expense because all her clothes appeared in posts and videos. The negotiation became a fascinating exploration of modern business models. The influencer presented engagement statistics showing how different outfits affected her audience response, brand partnership requirements that specified certain clothing styles, and income directly tied to her visual presentation. The breakthrough moment came when she offered to create separate business and personal wardrobes going forward. This proactive solution impressed the agent and resulted in partial approval of previous claims, plus clear guidelines for future deductions. The 9th story involves a real estate agent who claimed his expensive car as a business necessity because clients expected successful agents to drive luxury vehicles. This argument usually fails, but his negotiation strategy was brilliant. Instead of focusing on image, he demonstrated actual business use, detailed mileage logs, client transportation records, and documentation of how the car's features facilitated his work. He even showed how the car's reliability prevented missed appointments that could have cost commissions. The agent approved the business portion of expenses based on actual usage rather than perceived necessity. Our final story features a chef who claimed dining expenses at competitor restaurants as market research. Initially dismissed as someone trying to get free meals, the negotiation revealed a sophisticated professional development strategy. The chef presented detailed analyses of each dining experience, menu innovations inspired by these visits, and increased revenue from new dishes developed through this research. She even had customer feedback praising specific menu items that originated from these research dinners. The IRS agent, impressed by this systematic approach to professional development, approved the expenses with guidelines for proper documentation. What can we learn from these incredible encounters? First, Honesty and transparency beat creative storytelling every time. Second, documentation is your best friend in any tax situation. Third, focusing on legitimate business purposes rather than trying to justify questionable expenses builds credibility. Fourth, understanding the human element in negotiations can create surprising opportunities for resolution. The most successful tax negotiations happen when both sides work together to find fair solutions rather than treating it as a battle. Remember, IRS agents are people too, and they appreciate taxpayers who approach situations with integrity and preparation. These stories remind us that tax season doesn't have to be a nightmare. With proper preparation, honest documentation, and maybe a little creativity in presentation, even the most complex situations can be resolved favorably. What's your most interesting tax story? Share it in the comments below, and don't forget to subscribe for more financial adventures that prove reality is always stranger than fiction.